Okay, everybody, let's take a look and see what I think is going to happen going into next week. It's Sunday afternoon. The futures market opens up 5 o'clock Central Time here in the great state of Texas. Now, we're looking at the E-mini S&P 500 futures, the December 2021 contracts, and this is a monthly chart, guys, so just keep in mind looking at the monthly. Now, the reason I'm showing the monthly is because I want to just talk about, and I mentioned this a lot recently, is the distance from the monthly candlestick down to the 50-month moving average. Now, the 50-month moving average right now is 3,225. Okay, so there's a big gap between these two numbers, right? 4,700 and 3,200. I mean, my goodness, man, that's 15. So my math right, 1,040. Yeah, 1,500 points, guys. Okay, so just keep that in mind, that at some point this is going to come back down and meet the 50. Now, the 50 is rising, so, whatever it's going to do, it may fade off a little bit and start kind of flattening out when it all starts to meet up. I don't know when that's going to be. Is it going to be a big bang, bang, bang right away? Is it going to be, hey, this is going to play out for a whole another year going through 2022? Whatever. I'm not, right now at this moment on the monthly chart, I'm not discussing about, I'm predicting exactly when this thing's going to do the crash burn and come back down to the 50. I'm just letting everybody know that it's going to happen, okay? Because it always happens. I mean, just take a look. Look at this chart, okay? You can only go back so far until it just becomes to where you can't really read it because we're at such ridiculous highs right now. But look back here in I guess about 2007 through 2009. It came back, blew through the line. Through the 2000, 2001, 2000, actually 2003. It's like 2000 to 2003. Came back and went through it. And there's some other times in the past that did it as well. Okay, over here, I think it was 2011 that did it. Okay, here's a 2017, if I remember right, did it. Okay, look how 1, 2, 3, 4 times it always comes back. Okay, this, of course, we know was the pandemic crash. All right, and I'm trying to remember what this one right here was. Yeah, that's right. The end of 2018. I remember this. Look at them all. They all come back, guys. Every time they're going to come back and eventually touch the 50. Okay. So just on this chart alone, we saw about 5, 6, 7 times in the last, 20 years, okay, 20, 25 years, that it always comes back and touches the 50. Okay, on the average, of course, the 50 is usually rising on the monthly. Let's pan way out one more time. Yeah, so going all the way back to like 1984, since this data was being tracked in the S&P 500 with the TD Ameritrade's platform. But, there's a few times it came down. You can see like in here. Kind of came down a little bit. Here it came down. But usually it's rising. And then we got this huge rising phase. Okay. Which, this is people don't realize, a lot of people don't realize, from right around this area here, guys, moving forward was the great experiment, the massive Federal Reserve intervention. Which, by the way, guys, in case you don't know, they're not federal anything. I don't know if people realize that. Federal Reserve is not federal anything. They're not a federal agency. They never were. And that name is complete baloney. Okay? There's been many attempts to have the Federal Reserve audited since their existence, and they're almost never audited. What are they afraid of? That when we peel back the books, we'll see the real truth behind all the shenanigans they've been doing for how many decades? What a bunch of crooks. Federal Reserve, what a joke. In my opinion, those people should have been in prison decades ago. But anyway, I digress. So just keep in mind that, we're really far removed from the 50-month moving average, and it's going to return to it, guys and gals. At some point, it's going to return to this. And even though it may not, like I said, it may not be straight down, I don't know exactly how this is going to play out, but whatever. Take your pick. Maybe it flatlines a little bit, comes down more sharper. Maybe it comes down real gradual, like over a period of a few years. Whatever it's going to be, it will return to that 50. And when it does, there's going to be a significant enough loss going on in there that's going to shake a lot of people, shake a lot of money. A lot of people are going to lose a lot of money, guys. Okay, let me switch over to the weekly just real quick, and then we'll finish up with a few other charts. Yeah, the weekly, even on the weekly, we're a little bit elevated here. We're at about 41.42, 41.44, I'd say. Here we're at 4,700. So, even right there, you're looking at well over 500 points, right? 560 point area, somewhere in there, about 560-ish. So, again, super elevated. I mean, just think of it back here. Look where we were back here. Okay. Just riding along to 50. The weekly was riding along to 50. Let me see if I can get this to... am I on maximum? Let me get weekly maximum. Here we go, weekly maximum. So look throughout history, okay? Throughout the history, at least back to 1984, look at how the weekly just hugs the 50, the price hugs the 50-week moving average. 2008, 2009, which was a massive, massive crash, guys. Massive, over 50% if I remember right. That's the only time it wasn't hugging it. Every other time, it barely got away from it. It barely gets away from the 50-week. Barely. Here's the 2018, going into, from about October through Christmas Eve. I remember that. Got away from it, came right back to it. Okay, the beginning of 2019, same thing. Okay, the pandemic, same thing. Crashed right through it, this one. Okay, and here we are way up in here. Gave a little back right there just this past September, October, and we're off to the races again. So we're really far removed from the 50-week. I mean, like really far removed, like historically really far removed. Okay. Just think about the pandemic, or whatever you want to call it, the solar minimum nonsense that showed up here. Okay, I shouldn't call it nonsense, but the solar minimum and human behavior that seems to get extremely erratic at solar minimums, especially on weak solar cycles. If you didn't watch that video, by the way, you need to really watch it. I put it out yesterday. Excellent video. Okay, I'll put a link in the description about the solar cycle and stock market. Make sure you go watch it. So anyway, I mean, look at this. Even here during the whole pandemic, how far away from the weekly the S&P 500 got. It wasn't, didn't take much and it came crashing down. The quad witching thing that happened here, it didn't even touch the 50. So there's another reason of concern. Okay, let's look at the daily. Okay. 4.24% on the amplitude percent. It's gone red, as I mentioned on Friday. Okay, as a matter of fact, you know what? Let me go back. I want to show you all something. I think it's on the monthly. Let me see here. No, not the monthly. Is it the weekly? Oh, no. Okay, we're going to... That's a different product. Okay, I'm going to show you guys a different product, too, today. Anyway, back over to the daily here. Yeah, pretty good distance here, guys. 4.25%. You got the RSI down here at 76, which is obviously in the red zone as well. Okay. And just on, I think it was Friday, we got this red dot that showed up, which means we've got a 12-day and 3 and 4 day divergence overlapping. You could even see I drew in here the divergence. Okay, price is going up for the last 2 weeks, 2-3 weeks, whatever that is. Okay, and we got divergence in the Big Daddy. We also got divergence going on in the SMI. It's not huge, but it's there. Okay, so everything looks very elevated to me. And both on the monthly, the weekly, the daily, everything is screaming. One of my subscribers said that they thought the reason why we're getting all this crazy all-time highs everywhere is because more people are involved in the market. And the person's right. That has a lot to do with it. A lot of people, like I said before, I think it's 20-25% of the market is not working a job because they don't want to wear a mask or get the jab. Now you got, I think it's more than half, or close to half the states, United States, are suing the federal government over the mask and COVID shot mandate. If a company has more than 100 employees, so that's going to go to court. So there's a lot of, the LA ports down there, or Long Beach ports that bring in all the goods from overseas, and all the freighter ships that are backed up sitting out there because they don't have enough employees working the docks. So anyway, I think the person who said that in the comment section has probably hit the nail on the head, at least in part. Part of the reason why a lot of this is going on is because people don't want to work with the freaking face mask. I know a lot of subscribers have like believe in getting the shot and getting the mask, and that's your choice, and I'm cool with it. That's your choice. Go for it. What I'm not cool with is forcing other people to do it. Okay. So anyway, regardless of the multiple reasons why the marketplace and lots of different products, not just the stock market, not just the S&P 500, are absolutely crazy at all-time highs. Okay, they're not just all-time highs; they're like ultra hyper highs. Okay, and you'll get tapering. It's going to come from the Fed on their whole bond, their fakey bond. We're going to save the world purchasing program, another BS program by the Fed that's ruining the world. Every time they get involved in anything, they ruin the heck out of it and destroy everything they touch. Y'all ever heard of the Midas touch, where everything the guy touched turned to gold? But in the end, he realized that really he's just ruining everything he loved. He couldn't touch his loved ones, so on and so forth. You know the story of the Midas touch, right? If you don't, look it up. Well, that's the Federal Reserve. They think they're the Midas touch, but really they're just ruining everything. Ridiculous. Okay, so this week, just my final take on the S&P 500. If you didn't watch Friday's video, you can watch it. I put out a lot of futures videos, guys. Okay, but one of them is the S&P 500. I'll put a link in the description for that one too. Just watch that one. It's going to tell you the details about where I think we're headed. I'd be really cautious. I'm not saying it can't go higher, because in this market, who knows, anything could go higher. Okay, but just realize we are getting some signals here about divergences going on. Okay, and even if we just get a little one, look back here where we had white and yellow and then a red showed up. Okay, I know we haven't had a red day here, but just keep in mind that there's some hot signals showing up here. Okay, for the S&P 500. Okay, one last little quick look here, and then we're going to switch over to one more product I want to show everybody. We're looking at the hourly now. Okay, for the S&P 500. And yeah, Friday, look at this tape. Really came back pretty strong towards the 50-hour. So, and look at this, guys. Just so you know the validity of these divergence dots. Look at the red dot that showed up. I think that was like at 9 a.m. if I remember right. Actually, it was 6 a.m. Okay, 6 a.m. Friday, we got this red divergence dot that showed up. Okay. And what happened? 7, 8 from the whole day. The whole day was down. The whole day. Okay. Was a down day. Gave it all back from the previous day. Almost all back. And looking at the MACD on the hourly here, it still looks pretty elevated. Like there's some room for it to come down. Remember I talked about, I think it was on Thursday, I said these things only last like a day and a half. Well, on the Wilder, on the RSI, and on the amplitude percent, I said these things only last like a day and a half when they get elevated like this. See how it happened back here? That was less than a day. I said it doesn't last. And sure enough, look, it came banging down, and basically it's not quite back down where it normally is, but I think it's going to come back down there and visit somewhere in this area near the zero. Not there yet. Okay. On the amplitude percent. The RSI probably has a little bit more to go. I don't know, maybe it's down to this area, which was around 43, and right now it's sitting at 53, 54, right? Sitting at 53, 54. Might come back down a little bit more down into here over the hourly. We'll see what happens. There's a huge appetite for trading. So, until something super significant happens and just shocks everybody, until we get that like 700 point drop or 1,000 point drop or something, then I think it's going to wake everybody up. Until then, it's just, feast. It's just a feast, right? It's a mad frenzy. It's like piranha. Seriously, that's what I see in front of me right now. The craziness. Okay, retail investors who have just gone nuts. A lot of traders who don't understand what they got, where we're headed, and what's going to happen. But I understand when the feeding's good, people go for it. I totally get it. Okay, I want to switch over. Okay, so that's my take on the S&P 500, guys. All I can say is be careful. Things are really elevated. I'm not saying don't trade, but to me, we're in dangerous territory. Yes, it could even go to 5,000, but it doesn't negate the fact we're in dangerous territory. We're in dangerous territory, and so I just say, if it was me and I'm trading up in these nosebleed areas, I'm probably going to keep my position small. I know a lot of people just got to be thinking I'm crazy for saying that, but that's the way I feel about it. Keep the position small. Yes, trade, be profitable, but really make sure you have your stop losses in place, guys. For crying out loud, that's a bare minimum. At least keep your stop losses in place anytime you have an open order, because the thing could come crumbling down like that at any time. Okay, that could be Monday. It could be a year from now. Okay, seriously. All right, let's move on. I want to show you another product. This is going to be an eye opener for a lot of people. And this next one's going to freak a lot of people out. I'm trying to figure out what to do with this myself because it's just absolutely crazy. Okay, guys, this is Oats. Okay, these are the Oats futures. Okay, and that symbol is as far as I know, there's no E-mini Oats. Okay, it's just the big contracts /ZO, or maybe there. I don't think there's E-mini Oats. If there were, it'd be XO. Let me just check. Maybe there's an XO. I don't think so because it's so thinly traded. Yeah. There is no. Let's see. What is XO? It's like at one time they tried to get XOs going. Maybe, I don't know. Okay. So anyway, ZO is the symbol for Oats futures. Okay. We're looking at the monthly chart. I mean, just look at this. You ever seen anything crazy like this? Okay, on our futures product. I mean, it's absolutely vertical. We're at, the high on Friday, which was all-time high, 779.5. That pulled back about, 30-ish points here, maybe a little more, 33. Okay, but in the last 1, 2, 3, 4 months, 5 months now, particularly October, was absolutely nuts. I mean, look at this MACD. I mean, who's ever heard of a MACD at 93? Okay. Here's the one I really wanted to talk. Two things I want to talk about is down here at the amplitude percent. It's at 55.5. What does that mean? Why is that a big deal? That means the distance from this bottom of this candlestick all the way to this line is over 50% of the price. Everybody understand what I'm talking about? It's over 55% of the price. That price, or this price right here as of right now. Okay? That's insane. That this gap between this candlestick and the 50-month moving average is more than half the value of this 746.5. That's absolutely nuts. 55%. Now, this thing will come back down. Okay? And let's take a look back. Since we're looking at the monthly, let's just look back, okay, and look at some history here. So here's part of the 2007 through 2009 crash. For those that were trading, remember that. Let me get rid of some stuff on the screen. Look at this. The 50-month moving average was here. It got all the way up into here and came down. And what was the 40? The amplitude percent, I'm just checking out the amplitude percent right now, okay? 36, it got to 39, it got to 39 again, 41, almost 42, 40. So it got up to 41, guys and gals. That's as high as it got over here. It got to 41% away from the 50-month moving average. That's as high as it ever got, okay? Over here, it only got to 17 in this area. It only got 17 away, and that's probably over here about 20 something. Yeah, 24 on this one, 24 on this one, okay, 17 on that one. They all came back down. and touch. And look at the way the 50-month moving average works, guys. It doesn't do any crazy spikes and crazy dips. Okay, look at it. It's just it just stays very flat. Because it would take such an enormous move to get the 50 month to do anything dramatic. Even this big move upward, this crazy move upward has barely made the 50-month move. So why am I mentioning that? Because on the monthly chart, when the price does come back down and meet the 50, it's going to be a huge drop. Okay, it isn't going to be like the 50 is going to come up here and meet it. It isn't going to do that. Because historically, it's never done that. Look at this one. So I don't know when this is going to pull back. I have a feeling it's going to be soon. Few months, next month, this month, 2-3 months, I don't know. But when it does, it's going to be like bang, bang, bang. It's going to be like a 4 or 5 month period. Why do I say that? Because that happened every time. Look, 1, 2, 3, 4, touch the line. This one, 1, 2, 3 months, touch the line. Okay. So it looks like the further away it is, of course, it takes more months to come back down and touch. But you could probably just look at how many months it took to go up. You can kind of group all these into 1 month. Okay, so 1, 2, maybe 3, 4, 5, 6, 7 months, maybe at the most, that this thing would come back down and touch. I don't know. Let's say the 50 is kind of doing that. 1, 2, 3, 4, 5, 6, 7, whatever. It's over here. Okay, back down right around 400. Okay, my calculations, I worked out a spreadsheet yesterday looking at all this craziness, and I think we're going to, historically what happens, guys, is the price comes back down, and look what it does. It basically comes back down to where it was before it all got crazy. Even this one, look where it happened. You just draw a line from the price to before the big bump, and after, they're almost identical. This one wasn't. This one stayed up elevated. Okay. But the other two did. They came right back down to where they were. Okay. That's, even if it does one of these and stays a little elevated and comes down. Okay. Maybe that's like in this area instead of this area. It's still right around 400. Okay. And I think that's where oats are headed. I just don't know when. Okay? I'm looking at this going, my goodness, man, this is a shorting opportunity of a lifetime. It really is. The shorting opportunity of a lifetime, guys. Just as much as an opportunity that people are making money up, don't forget there's opportunity coming down. I just don't know when that is, but I think that oats are going to make their way back down to 400 over a period of a few months. I think it's going to be hot and heavy. I don't know exactly when, but I'm definitely keeping an eye on this. This number right here, on the Big Daddy, 441 back in October, guys. Right here. This number, 441 at that point, okay, is crazy. It's never been that high, ever. Over here was, let's see, 417. Okay, that was the highest it ever got before this time. 417 back here in the Big Daddy. So this is the highest we've ever seen it by far, easily. Okay, the thing is, I don't see any hint of this thing rolling over yet except for on the Big Daddy. It's the only place that shows it maybe it's going to roll over. And I think it's probably right. You got one little white dot back here saying there's a divergence. I mean, how often does a white dot show up on the Big Daddy for divergence? Like almost hardly ever. In the what? Not quite 20 years of history we're looking at here. 18 years of history we're looking at. White dots on the Big Daddy only show up like 1, 2, 3, 4 times in the entire history. So, that tells me when a white dot shows up on the Big Daddy on the monthly chart, pay attention. Now, granted, it happened like back over here somewhere. Okay. But these two white dots showing up on the SMI. So, man, oh man. 55%, guys. Okay, let's just switch over to the weekly real quick. Finish this thing up. Yep, really far removed here too. 40% on the amplitude percent. Well, you know what I wanted to show everybody? Going back to the monthly real quick. Look at this RSI, guys. 86.3. 86. Talk about nosebleed. It's got no room to go higher. Right? If I'm not mistaken, I think that the top level is 100%. It's like 100. It's at 86. Okay, its top line is 70. I guess in theory it could go above 100. I guess. Is there such a thing? Yeah, I guess in theory it could go above it. Okay, but 86. Look throughout the history. Only time it was higher again was back here, and it was at 84. 84. Never been higher. So nosebleed section of the bleachers for Oat on the RSI, and same thing with the amplitude percent. So I just want to show everybody that on the monthly because I thought that was just another thing that was eye-popping. Okay, back over to the weekly here real quick. Yeah, huge. Even on the weekly, amplitude percent is 40, and look at the RSI on the weekly, even higher, 88. 88, my goodness. My goodness. Crazy. Okay, look at the daily. Little bit of a zoom in just a little bit here. Just a little bit it gave back the last couple days. Of course, alarm bells are going off on the daily. Just alarm bells everywhere. Look at this. String of yellow and some red sprinkled in. Now white back showing up again, which is all saying divergence, divergence, just like screaming divergence. Okay? Wow. So on the daily chart, you know, we're seeing a rollover here. Okay? We're beginning to see a rollover on the MACD, but the one I'm really trying to pay attention to for this long-term trend is the MACD. You know, it just kind of stays really close and pinched up, and trying to get a sense of, you know, what's going on with that thing. Because on the weekly and the monthly, it's still showing lots of strength. Lots of strength on the MACD on the weekly. So it's really hard to get a feel for when this thing's going to turn. Usually you look at the shorter time frames like the daily to get a sense, but you know, even on this pullback right here, it was only like 2 days. I mean, it's just such a monster piranha feeding frenzy that there's like the pullbacks don't last like but a day or two. I mean, even this one right here that lasted like a week and a half, I mean, it was a pretty big drop actually, from 515 down to 484. That's like 30-point drop in wheat, which for those who don't know, that's a lot of money. Okay, a few contracts made a lot of money right there. Okay, that's the daily, which, you know, looks like it wants to pull back and roll over here, but, you know, again, feeding frenzy. Absolute chaos on the hourly. Back and forth and above and below, but it looks like it's giving it up here a little bit. The only thing about Oats, and you'll notice these sparsely traded lines. Okay, that's the one thing about Oats, guys, is it is very thinly traded, even on the big contracts. So if you're going to trade Oats, be prepared you may have to hold on to it for a while. And that makes it a product that you got to be really good at your timing. All right, guys and gals, I think that's it for today. Hope you all enjoyed the videos. Please subscribe to the YouTube channel and give me a thumbs up. I really appreciate it. Don't forget to click that little bell to be notified of all the videos I put them out. We'll talk to you all real soon again next time.